morning, Mark Soderberg with ADM Investor Services with your morning ag market outlook for Friday, July 18th. Well, all green on the screen here this morning as prices surged overnight, injecting weather premium due to expanding heat across the nation's midsection next week, which could threaten this year's yield potential. Up until now, weather has been nearly ideal this growing season, with markets pricing in record yields for both corn and soybeans. Right now, corn 6 to 7 better near session highs. Soybean prices 12 to 13 higher. Wheat ranges from about 4 better in Minneapolis to 10, 11 better now in Kansas City. In the products, we got bean oil up about 70 points, with meal up $2 to $3 a ton. The current cool conditions across much of the northern Midwest, that won't last as heat is expected to build from the southern plains across the western Corn Belt and into the central Midwest and eastern Corn Belt by early to middle part of next week. 100 to 105 degree readings this weekend, with central Midwest and eastern Corn Belt likely to see highs reaching in the low to mid 90s by Tuesday, Wednesday of next week. Rainfall over the next week expected to favor the eastern part of the northern plains along with the central and eastern Corn Belt, limited to no rain for portions of the southwestern, Midwest, and southern plains. Extended forecasts do show this much above normal temperature pattern holding into the end of July, with precipitation below normal in the south, with normal to above normal still across the northern regions. Yesterday's drought monitor did show corn and soybean acres in drought continue to ease. Corn down another 3%, only 9%, while soybeans rest at 7%. It was down 2% for the week. Both, however, are higher than last year at only 5%. Activity from the speculative traders mixed yesterday. Moderate buyers across the soy complex, light sellers in the feed grains. This afternoon's CFTC report will likely show money managers net short across the ag space, with the exception of bean oil, where they're still long about 40,000 contracts, near record short still in the meal. We did see a sizable jump in open interest yesterday in wheat as prices slipped into new lows, new contract lows for the Kansas City contracts. We also saw a big jump in open interest in soybean oil as prices surged to 2-year highs, or near 2-year highs, so maybe some panic buying here by end users. In corn, weather right now seems to be outweighing bearish demand news here as of late. Export sales yesterday were lousy, however, still up 27% year to date on old crop versus revised USDA forecast of up 20%. This while the Trump administration works to lower the consumption of corn syrup from the American diet. There's already been some evidence of pollination issues across portions of the Midwest due to the lack of nighttime cooling. Obviously, the current forecast will not be helpful for some of the latter maturing crop. I don't know that it's been widespread enough yet to dip yields below the current USDA forecast of 181. But in my opinion, I think the market had been trading yields as high as 185. So I think we're starting to tail off from that level. Resistance rests at the 430 level here on D's corn, the gap left from last week. But despite the recent rebound in price, spreads do remain weak. August beans overnight did so far top out pretty much right at its 100-day moving average at 1037.25. November beans did surge above both its 50 and 100-day moving averages while working into that gap from early last week. New high overnight for the oil. Wheat continues to be a follower here. Resistance for the CEP Chicago, that comes in at its 50-day moving average at 550.5. That same technical level for Kansas City comes in at 541.25. Thanks for listening, everyone. I hope you have a great weekend.